traders, hope you all doing fine. A new YouTube video again. Within this video, I'm going to talk a little bit about proper executions and following overall momentum / trend. It's a very important topic, and it's a thing that you really should follow within your trading. Don't understand me wrong. You can trade counter moves perfectly fine, but trading with the overall trend, is more probability. Simply as that. So an example we see in GBP, GPY overall. Okay, if you look at the overall picture on the hourly, you can see that price was overall trending. Okay, simply as that, and we can identifying a small little downtrend right now on the hourly. So you can see market is pushing from bulls to bears. Okay. Some people will call this a trend line. I'll call it a momentum line. You can just use it as a confluence to identify overall momentum. Okay, and you can see overall momentum was to the upside with little pullbacks, and overall it was uptrending. And you can see price of creating a little downtrend right now. Sellers were more strong than buyers. So in this condition, it's recommended to looking for overall short positions. Of course, in combination with structure, exhaustion, rejection, stuff like that. I'm gonna give a little example of what I mean. So you can see price is overall a little downtrending right now. You can see it. So in this conditions, it would be wise to looking for a short. I took a short on this today. Once again, I will also show you on probable counter move what you could trade off. Right here, for example, you can see this is a valid level of demand. Okay, and you can see price have spiked within this level. Right here, rejected this level and push it up for almost 20 to 30 pips. So this is probably a nice counter move, which is also which is also great, but understand your ranges, understand the price, and what price is telling you. So yeah, definitely a nice level right here. I move it to the lower time frames when I saw this happening, and I was looking where could price probably find a sort of level of supply, where could price find a level of supply. And I was identifying a level right here around this edge. Okay, and you can see price spiking in this level. And zoom it out, the bigger picture, on the hourly / minute 30, and you can see we have the overall nice little downtrend, So in my head, it was wise to looking for a potential short, and identifying a level of supply up front, where price probably would spike in, find orders, to push the price in that direction where price is now trending to. Okay, and then I'm talking about not the daily or 4 hour. I'm talking about the lower time frame trends, so that are short-term trends that you could follow, and in terms of supply and demand. Like I also discussed in my other video, the first and the second time back are high probability trades, especially if you're trading supply and demand. So if we're moving to the lower time frame, for example, and we have identified that hourly level of supply in your counter moves, you can see that it was the first time back to this supply level, which gives high probability. Okay, moving to the lower time frames, you can see price having a hard time to break to the upside. You can see it on almost all time frames. So you saw that that bear move, that correction, and again we saw that push. We saw that push from this level. Your counter movement, like I discussed, push to the downside and move to the downside. So you can see on the lower time frames how structure is being created. And you can spot beautiful moves, especially to fresh levels of supply and demand. Okay. Yeah, and this is a trade that I like to discuss. And definitely, so you see the first time back to this level, price pushes to the downside. So more than likely, price is gonna continue that trip, okay, to the next level of demand. For example, you know, you can identify a couple of levels to the downside. If price not rejecting this or turning back to the upside and we have a valid structure break, I would expect that price will fall down a little bit more to the downside, okay? And you can identify multiple levels as potential targets. You can say here, for example, right here, you know, so that's our potential targets, and of course with proper pullback. So, and in terms of supply and demand trading, we call it a swap level. So that means price broke through this level, and more than likely it will push a little bit more to the downside, turning back to this level to test this level, and then fall more to the downside with two potential targets to the downside, 138,500 and 138,100. Okay, that could be in scenario as long as price stays below this base. Okay, more than likely, within price moving forward, price will be creating a new basis in terms of supply and demand trading. Okay, it's a very simplistic approach of the market, but it works perfectly fine for most traders within the community. So that is pretty great. And I was thought myself, Kev, record a little video for YouTube, you know, and just show the people it. Same stuff you can see right here on GBP USD. Beautiful movement. You can see it right here. Price trending a little bit more to the downside, rejecting this level again. You see a lot of rejection within this level. Of course, your first target should be here. Second target could be here. Third target could be here. Okay, beautiful. So yeah, definitely nice ranges, nice structure. Little short video. Hope you enjoyed this explanation. Just backtest it for yourself, and hope you enjoy. Wish you all great and lovely weekend. Enjoy it, and we are back next week with new videos and new analysis. Much love. Bye bye.